It is May 28th. This is Finance 3402, probably, high probability here. And we are going to commence class. And so, let me open it to you first. Are there any administrative concerns going on in this class?
Not in this one.
No? Everybody okay, keeping up, clear, everything pretty clear on what you're doing? Pretty light workload at this point. I think most of your time may have been spent with the time value of money. Everybody have their calculator now? You ready to function with that? We'll go through a few of those problems and you let me know if there are some that are giving you any kind of trouble at all. And let's see. Then we'll look at a couple of the problems that were assigned in the textbook and you'll tell me if those were reasonably clear and easy to address or not. Okay? And then, let's see, I think next week, or the week, which is the week we're not reading, is when you get into Chapter 3 on financial statements, which is going to rely on your accounting background, that you had financial accounting. And so you can identify a balance sheet and income statement, and you can identify the liabilities and the assets, and you can construct various ratios to analyze the financial health of an organization. So, assuming that that financial accounting information is still reasonably fresh in your mind, that's mostly, here's the formula, pull the numbers out of the statements and plug them in, here's what it calculates to, what does it mean? And for the exam, I will not have you memorizing those ratios. You'll be able to have a cheat sheet or an open book, and I'm much more concerned, of course, that you can calculate them, but much more concerned that, what does it mean? If this ratio is way out of whack, what kind of questions should you start asking? So Chapter 3 is a little bit, it's got a little bit more work in it in that sense. That's pretty much where we're going. Well, let's start off with the time value of money. Okay, calculators, everybody. When you get ready to do your time value of money calculations and you turn your calculator on, what's the first thing you do? Clear the registers. The little yellow button that says second, and then the third button down on the right says clear TVM, and a little yellow print above it. Second, clear TVM. Now all the registers are empty of any numbers you might have left in it from prior calculations. Failing to do that can give you terrible answers, but some of them might be on the answer key, so, you know, that would still be wrong. Anybody got any issues about time value of money in the calculator at this point?
Yeah, I posted online. I don't know if it was just me, if I missed something, but I was always like 0.01 cent off, 1 cent off basically.
When you operate your calculator, how many decimal points do you show? 2. I usually run mine with 4, and I don't know if that will account for the difference, but because the calculator is got to round off at some point, and it'll cause those minor discrepancies. That kind of minor discrepancy, because on the exam I'm going to want you to show me all your work step by step, will not penalize you in the least.
Cool. Okay, I was getting pretty worried there.
Nah. Nah. That's too much detail. Okay, anything else? Any other questions? I'm going to just throw a few situations at you. You tell me what to do. If I've got $1,000 today and I leave it in the bank for 12 years and it's earning interest at the rate of 5%, how much will I have at the end of 5 years?
$1,276.28.
How many? 17?
1,276.
Well, I got a different answer.
We got 1,795.85.
I did too.
That's what I thought.
Always go back and check it once, because if you're like me, you push the wrong button. I tend to do that habitually. I'm going to round it off to that.
I got 86 too. I guess my calculator just
You got 86 here?
No, the same.
Yeah, I got 8563, 8563 out to
Yeah.
4 points, so I just,
So if it rounds it and that's all we
No
see,
problem.
it's not.
yep, the pro number. Just to remind ourselves, 1,000 was the present value, and I put that in with a negative in front of it, because either the present value or the future value, one is going to have a negative sign. Okay? And then N was 12, and the interest rate per year was 5. Calculate future value. Did you get it to come up?
Yeah, I did.
Okay.
I put N as 5 because I just could have sworn I heard you say at the end of 5 years. Calculate.
If I said that, I said it wrong. It should be at the end of 12 years. Good. I'll get to go back and watch it on videotape and see that I'm wrong. That part won't be on video. This whole conversation won't be on YouTube. Okay? Everybody okay with that? Comfortable? No big deal? Okay. Let's do another kind of straightforward one, but with an annuity. If I put, and here we're going to break it down a little more. If I put $300 per month into an account that earns me interest at 7%, and I do that for 6 years, how much money will I have at the end of the 6th year? And I've thrown a landmine into this calculation. You see what it is?
Is it per month?
You got to convert everything over to a monthly basis. So your interest rate, well, this is going to be your payment. Anybody feeling confident?
26,748.28.3 or 31 after that.
$26,748 and about 28 cents.
What if I did it right?
That's what I got, 26,700. You adjusted it wrong?
Anybody got any questions about that? Everybody clear on what we did? When you have to convert it to a monthly basis, you take the annual interest rate and divide by 12, because you're going to be assuming a monthly compounding, which just makes a small difference. And if you're going to do it monthly for 6 years, that's 12 times a year for 6 years. So 6 times 12, 72 payments. Okay? Everybody clean and easy with that? Cool. And let's go discover error 5. It looks like this. If today I have $2,000 and in 4 years it will grow to $5,000, what interest rate would I have had to be earning? Well, your money,
25.7.
I got 25.74%. Okay? Because 5,000 was the future value, negative 2,000 was the present value, and N was 4. Now, if you put both the present value and the future value as positive numbers, you get error 5. That's what that means.
That's what I-
Yeah? I guess I should put that on the answer key, right? Tell me what the rule of 72 says. Anybody remember anything about that?
Well, I know you use 72 because it was more accurate. You 72 you divided by your interest to solve for.
Right on track. And
To solve for the number of, was it, yeah, the number of years that it takes to get to
double your money.
double your money.
Okay.
There you go.
So
Put
if
the words right on my mouth.
the interest rate I'm earning, IY, divided into 72 tells me the number of years to double my money. Now what do we see over here? 2,000 doubled to 4,000 plus some. Okay? If you doubled your money in 4 years, what interest rate were you playing with? 18. You see that? That would have been 18. If I had just doubled it from 2,000 to 4,000, it would have come up 18% interest. It came up more than that, so you know your answer is more than 18%. So you should feel a little more comfortable with 25% there. Does that make sense? Okay. I just found a deal on a condo that I can buy for $92,000. I'm going to buy it on a 30-year mortgage. With a fixed rate of interest at 3.5%. I'm going to mortgage the entire amount, so what is my monthly payment on this mortgage? Hint, the $92,000 is the present value. The lower amount is the present value.
You do that on test, it'll be great.
$413.12 a month.
Yeah, 413.12.
I can afford that.
Well, let's explore that a minute. Everybody okay with 413.12? Everybody see where we got it? Any questions? I am terrible at mind reading, so let me know if you have questions. And you look at that and you say, you know, $92,000 condo, $413 a month, that's not so bad. What am I leaving out?
Interest?
Interest.
No, that includes principal and interest.
Oh, you're leaving out the insurance.
Good. I'm going to have some insurance on it.
taxes.
I'm gonna have to pay taxes on it.
Maintenance.
homeowners
I'm gonna probably have to belong to a homeowners association, and then I'm gonna have the continuing maintenance of the property.
That can get you-
I
Yeah.
did not for that.
I'm not sure that's out of reason. Let's just say for grins, that I can insure this thing for $400 a year. Real basic stuff, you know, basically liability. You typically, if you buy attached structures like that and you belong to a homeowners association, the homeowners association insures the exterior of the property. So anything happens outside of the property or to your exterior walls and stuff, they're gonna cover it. You're just covering stuff inside.
Sorry.
And if you're gonna rent it to somebody else, you tell them, you know, you better have renter's insurance, because I'm not paying for anything you screw up. So $400 covers me, let's say, mostly for liability. What's liability?
If something were to happen on your property.
Something happens to my tenant, or his buddy comes over and falls down and wants to sue me, that kind of liability. So let's say my taxes are gonna run me two grand a year. Let's say my homeowners is gonna cost me,
$50 a quarter.
how much?
$50 a quarter?
More like
No.
I
140.
have a couple of condos in a place that has no facilities, no pool, no clubhouse, no nothing. Costs me $120 a month.
What?
Yeah.
Yep.
500 more than that.
Let's try 140 a month.
Yep.
Year. And continuing maintenance, I'm gonna budget, $100 a month. Okay? Yeah, $1,200 a year to replace carpets, replace an appliance, pay the plumber, okay?
Usually once you get your tax return, something goes wrong.
How much is this gonna cost me then on a monthly basis? Well, we take the 2,000, and how much is that per month? Come on, you can do that. $167.68, is that about right?
166.
166, 67.
66.
That's okay.
Close.
67. Okay, so now what do we got? 400, 546, 47, 40. No, that's a year.
That's
That's-
$300
yeah.
a year.
How much is that a month?
That's
Like
$33.33.
Okay, add those together, that's 200, plus 140, plus 100. So 440 for that stuff, and 413 for the payment. So I'm looking at $853 a month budgeted cost. Well, then the question becomes, if I could rent this thing, how much rent would I have to get out of it to be alive, to make a good return? What if I told you I could rent this condo for $1,000 a month? Okay? Just play my game. If I could rent it for $1,000, and my costs run me, I'm gonna round this off, keep it easy, $850 a month. And so I'm making what, $150 a month is my profit, if you will, right?
But don't you have to pay taxes on that?
On what?
On
On
the
the
rental?
rent?
Yeah,
Oh, yeah.
Yeah.
okay.
So I'm doing a pre-tax profit,
Okay.
yeah, before tax. But remember too, that when I do file my taxes, I'm gonna claim depreciation on this dwelling as well. It's gonna be a hell of a good tax advantage on that. It's probably gonna offset most of my tax liability. So we'll ignore those two. If I make $150 on this thing per month,
$1,800 a year.
that's $1,800 a year. And how much was my investment? $92,000. What sort of return on investment is that, ROI?
$1.95%.
1.95%. Does that sound like a good investment or not?
Well, you are getting something.
At least it's a positive number so far, unless some of these forecasts are erroneous.
It is economy.
First time it sits empty for 2 or 3 months in a row.
Mm-hmm.
It looks pretty thin. This might not look like that attractive of an investment right now. But some of the things we would ask were, first of all, what's my opportunity cost? And then what else can I be doing with my money in the meantime?
Well,
And if you put it in the bank, you can't touch 1.95%. Okay? 1.95% is keeping up with inflation, give or take. That's about all. But what else, particularly in today's market, what else do we hope is happening? What's going on with real estate these days? It is finally beginning to recover. Nationwide, home prices went back to their 2003 level last month. That's a tremendous step forward. So perhaps over time, my $92,000 investment will grow in marketable value as well. And typically when these prices are going up, rents begin to go up as well. So maybe I could be renting it next year for $1,050 or $1,100.
Yeah, but you also gotta be careful too, is your taxes will normally go up every year too. That will not be based upon how much your house is worth. It's the
The
tax-
market.
Yeah. And
If I made another $100 a month, what would happen to my investment though? If I could get another $100 a month out of this thing, $1,100, I would then make what? 18 plus 12, I'd make $3,000 a year on my $92,000 investment. What kind of return is that?
a little over 3%.
3.26%.
3.26%. So if I could either find a way to increase my revenue by $100 a month, or decrease my costs by $100 a month, or some combination of the two, look what can happen. Look how that can impact on my return. So that's what all these numbers are about to me. They're kind of interesting.
You try using my calculator because for this, I keep on getting 4.20. I don't know if it's rounding stuff. I mean, I'm putting it in the same way. I just got it.
This one, somebody was telling me about
Is that
these, and I
yours?
haven't used one.
That
I
is
have
too.
the, I mean, I have the other one in my car, the VAT, but
And then 30 year mortgage at, what do you say, 3.5%?
yeah.
Yeah, I get 144.79 also.
Oh, that's fun.
And I don't know why.
And I'm putting it in like when sometimes like it does it right, and then some it's throwing it off like way off.
I don't know the answer to your question. I would say the first thing to do is to get on their website and see if they've got any explanation about these variations.
Okay.
And in the meantime, hang on to your other calculator.
Can I run
Which
out to my
calculator
car
do you
and
have?
get
If
it?
you'd like, sure. We're going to be done here in about 30 minutes,
Okay.
so it's your call.
Is this the one you have?
That same one.
Okay.
He was having problems with
What did you do to it?
Hit the second, I think me and you figured it out last time, that one, plus the future value button, not this one. To make sure it clears out, because that's what we were doing last time.
So what do you do?
Which one did we hit? I remember us monkeying with
The
it.
gray one,
Okay.
and then the future value one to clear out your totals.
Oh, okay.
If you hit that one like we thought it was, it's not clearing them out.
Oh, clear TVN.
Yeah.
Okay.
Maybe
That's
try
what I
that.
did before I did it.
Yeah.
So,
Try
Okay,
that
let
and
me
see
try
if
it.
that works, because we tried
How'd
it.
you get 4 zeros? What are you confused?
Oh, that's because it's a setting
What setting do you have it at?
to set 40.
Sorry.
I'm trying to remember where I had that.
what's that, setting the
Yeah,
decimals?
it's in the decimals. I think
it's
it's, oh,
Sorry.
You would see the number.
yeah.
Is there a format button?
Yeah, that's what I was looking, oh. Here it is. Right above, hit second, and then right above the decimal points format.
Mm-hmm.
And then the first thing it tells you is your decimals, and I think you type in a number, and that's
Yeah.
how many decimal
Just hit
points.
2 or
Okay,
3 or 4.
I put 4.
Alright, thank you.
Okay, cool. At any rate, one thing I want you to recall from all of this, I use the term return on investment, okay? That is typically a percentage rate that shows how much return per year, is an annual rate, you're making on an investment. And that's one of the basic ways we compare alternative uses of our money. What's got the better ROI? So be familiar with the term return on investment. And another way sometimes people say that, it's made, overpaid. Except it's always on an annual basis. What did I get into this investment for, and how much per year does it make me? Okay. We may come back and do a retirement problem with the time value of money here in a minute, but let's take a few minutes and look at a couple of the things in the textbook. Did anyone have the time and take the time to work through these exercises?
I like the cool accounting and the cash accounting one. Can you put one like that on the top?
Was that problem 1.2 about the book sales?
Yes, that one was easy to understand.
Well,
The one I had a little difficulty, I had to look at your answer, was 1.4, but
okay. Yeah, like to look at all of these, or most of them. What will happen on the exam is I'll go back to these problems and I'll pick out one or two of them and construct something pretty close to it. So you want to have worked these problems at least once. Where to start? Let's look at the one on the books for a second. This outfit sells books to bookstores, and they shipped and billed books for $760,000. What does shipped and billed mean?
Where are you? What page are you on?
Page 25? Thank you. Page 25, problem 1-2. And
Shipped and billed.
for that, this was shipped and billed. In other words, this was their sales, gross. And they collected $690,000. Which means there's about $70,000 that was shipped and billed that has not been paid for. Okay? And their cost of goods sold was $300,000. It cost them $300,000 to buy those books so they could then resell them. And the common term for that in accounting frequently is cost of goods sold. So if we were going to look at this from an accrual basis, we would show sales of $760 minus cost of goods sold of $300,000, and we'd say, my goodness, they made $460,000 profit. Because we recognize that sale, that $760,000, we call that a sale as soon as people ordered it and we billed it. Even though, what? We didn't get any cash in. Okay. If this would be the accrual basis, and on the accrual basis you could say, well, you're doing pretty good. But if you did it on the cash basis, you're showing that you had $760,000 maybe in sales, but what did you really have? You had $690,000 in cash collected. You had $300,000 in cash spent to buy the books. And so by this basis, you made $390,000 in terms of your cash flow. Are you tracking with me on that? So if you looked at this and said, I made $460,000 last year, let's take all the employees on a vacation down, the Caribbean for a couple of weeks. You just overestimated your cash balance by $70,000. That can come back to hurt you. I think it's a good illustration of why the accrual type accounting that they teach us in the classroom is very useful, but it is not what you can operate a business on a day-to-day basis. You've got to base things on cash flow. We say again, cash flow is the lifeblood of a business. If you haven't got the cash flow, all the accrual-based profits in the world won't do you any good. And the biggest place, I think, the biggest place, small businesses to me means any business less than 500 people. Okay? That would be 97% of the businesses in America. The biggest place they get into trouble, particularly new people starting out of businesses, they don't understand the difference between what their accountant may be telling them or their QuickBooks system that he set them up with versus their cash flow. And so cash flow is life or death. What was the other one you said you had looked at?
1-4.
1-4, marginal cost benefit analysis. Some of you may recall these are economics terms. Marginal costs, marginal benefits, marginal revenues. Let's see what we got here. They're talking about changing out their robotics, which will give them $560,000 benefits over 5 years. Existing, this is the new system. The existing system, if they don't replace it, will give them benefits of $400,000. And in order to go to the new system, there would be a cost of $220,000. And if we get rid of the old one, it has a salvage value, that is, we can sell it for $7,000. Okay. What does the term marginal benefit mean? What is the marginal benefits from changing to the new system? What do we mean by the term marginal benefits?
Basically, like incremental change.
Incremental or additional revenues in this case, okay? If we go to the new system, we're going to net 560 less the 220 to get it installed. So that's going to make us, what, 340? Right?
What about the 7,000?
Plus, when we sell the old stuff, we'll get 7,000. So it looks like our marginal benefit of changing to a new system is going to be $347,000.
70,000?
Is that about right?
Is it 7 or 7?
Is it 70 or 7? I was reading in a hurry. It's 70, thank you. That makes it even better. 70, so this is 510, 410. Sorry about that. Just a zero here and there. You know. Yeah. That is what I've done. I'm not following probably the solution in the book. This is the net marginal benefits gained. What they want you to take a look at is what are the marginal benefits and the marginal cost. And so for marginal benefits, we get the 560 plus the 70. And for marginal cost, we get the 220. And it's the same thing. Because the first question says, the marginal benefits of the proposed new robotics. Well, the marginal benefits are the 560, plus when we salvage the old ones. The additional or marginal cost of doing that would be the 220. The net benefit is what we went through in a hurry. It's just the difference between the two, 410. What should they do? Should they go with a new robotic system? It's going to make them $410,000 over 5 years. So that part sounds good, as long as we treat it in isolation. But then we also would be asking what other kind of questions.
What does it cost to maintain it?
Good. What are the maintenance costs?
Training.
How much time are we going to lose and cost are we going to incur in training people or retraining people to operate it? Frequently when you make a purchase like this from a company, if there are certain supplies that have to go with it, frequently you're tied to them to buy your supplies. And for a lot of them, that's where they make most of their money.
And it usually never works exactly the way it is
It
proposed.
never works the way they
told
told
you.
you.
Buy this other option over here that.
Yeah, it never works as well as they said.
Yeah.
But that's a given. That's a piece of law. And then, of course, we would be wanting to know, well, what other robotic systems are out there? Who's done the research? Who's really gotten into this before we make this kind of commitment? Does that cover that one okay? Okay. Look at problem 1-5? Some of you don't have a book, let me read it to you. Oh, it's not 1-5. I'm thinking of another one. Here we are. It's exercise 1-4, page 24. You got a donut shop here that it used to be that when people came in and they'd buy something and they'd get change, they'd just tell the cashier or whoever, just keep the change. That was their tips. Pretty good system. Anybody here ever work for tips? When I worked at Publix, when I went to college, when I first started there, we were allowed to keep tips. And man, I would have both pockets. I was feeling cool. And back then, you had a nickel by a damn candy bar, too. Those days are over. But tips were cool. And then somebody comes in here, management, don't you love that word? Management instituted a policy requiring that there would be no tips and that any change that a customer drives off without it, you throw it away.
What?
Requiring that the change be thrown out if a customer drives off without it. Okay, so far? And you know, and I know the manager's keeping all that change you're throwing out, right?
Well, and thing in management, if a manager told me that, I'd say, you need to go get your head examined, throwing it out.
Yeah, that's
I'd be like,
completely
no,
true.
no, no.
Right here into my purse.
What do you suppose happened to the operation of that coffee shop, donut shop, as a result? It even describes it in here. The lines got longer and the service got slower. I'm going to give you a quick question. I want you to take 2 seconds to answer it. Okay? My bill is $6.79. I give you a $20 bill. How much is my change? $13.21. You got that? You know how many people graduate in public school in America today can do that math even with a damn calculator? Fewer than 50%. We're hiring employees out there. I mean, McDonald's was the first one. They put pictures on the cash register because nobody could figure out how to, how much money we went here and there and the other. We have unskilled labor out there that cannot make change. Okay? So now you're making them make change, which they're having a hell of a time figuring out. Must be calculus in here somewhere. And then it's taking time to get that back to the customer, and the lines are getting longer, people are getting angry. What's the word for that in management?
Stupid.
Stupid.
Yeah.
Stupid. Yeah.
Because you're going to kill your business.
Yeah. So if you came in and that was the system, what would you do? You're the new manager. You just bought the place. What you going to do?
Yeah. We're doing that policy.
Wouldn't that make sense? Keep the freaking change.
Don't mess it up if it's not broken.
That's right.
It's
working
benefit
smooth.
and cost.
Yeah. Yeah.
It's costing you money.
Not real rocket science.
Well,
Now they discuss
for
this.
some people it is.
Yeah, it is. They discuss this in terms of agency problem, the principal agent problem. That is to say, if I am the manager of a corporation, my responsibility is to the owners, the stockholders, to maximize the wealth, their wealth. Okay? But I am their agent. And sometimes my job of working for them and making them all the money I can gets into conflict with my own personal desires or values or preferences. And so the principal agent problem talks about if you have employees who are doing things that benefit themselves but cost the company, then you've got a principal agent problem. And that's a lot of what we have to deal with at the managerial level. We find employees who are taking advantage of things. I don't recall if we did this in here. An employee is 20 minutes late 3 times a week.
It's an hour.
We have one of those.
He or she makes, let's say, $40,000 a year. Now, this is just rough figure, okay? But rough figure it is, you pay somebody for 50 weeks a year for 40 hours a week. So a year is 2,000 hours. So means for 2,000 into 40, this guy's making $20 an hour. You see what I'm saying? Good. He misses 20 minutes of work 3 times a week. How much is that? It's an hour a week. And if he does it for a year,
50 hours.
that's 50 hours of work at $20 that he got paid for but didn't earn. That's $1,000. Now, in terms of the principal agent problem, if you're the manager, you're supposed to be representing the principal, the owners, and you should be stomping on that with both feet. But in terms of a managerial approach, what does that do to morale for everybody else?
It goes down.
It goes downhill.
Others will start doing it.
Others will start doing the same thing. And you want to feel like a real fool, don't enforce it against him and then try to enforce it against the next person. And I know there's people in this classroom with the kind of attitude that would get right in your face. Okay? Not naming names. Yet. Okay? But what do you suppose one of the biggest managerial problems about this is? The reluctance of the manager to confront the violator. The
They've been
principal.
here for 15 years.
Yeah, yeah. They're so valuable. So how would you deal with that person?
Set them aside.
Set them aside how?
Discuss them private.
What would you say?
3 strikes and you're out.
Well,
First find out why they're missing.
They've already
those-
missed 3.
Yeah, let's find out what the issue is, okay? Let's know all the facts. But let's say that basically there is no excuse. He says, well, I just have trouble getting up in the morning.
Just their hours.
Yeah.
I'm sorry?
Just their hours, like they don't want to.
Just their-
They have to
Yeah.
Well, hell no, now you can come in at 7.
Seriously, why are you making me be nice to them?
Now, there are cases where you want to, if you're a good employee, maybe you got family issues, kids, you know, school, maybe you can work with them. We're not disallowing that. But I'm talking about the person who's basically doesn't care
Being a freeloader.
and is freeloading, yeah, free rider or freeloader. Okay? And I'm going to tell you just my instinct is when you can quantify stuff like this and say, I paid you $1,000 last year that you didn't earn. I know it, you know it, and everybody in this office knows it. Is that an opinion?
It's fact.
Numbers are facts. Okay? And then you can go, I think you go easily go from there. You know, this is your first warning. On your next offense, I will suspend you for 1 week without pay. And if it ever happens a third time, you're gone forever. Come in. All right? That was a couple things in the book I wanted to touch on. Anybody else? Anything else in the book? I would, as I said, urge you to do the problems, come to class with anything that you're having issues with. I'll either work through them and explain them lucidly, or I will leave you so damn confused we'll agree not to put it on the test. One or the other. Last problem, time value of money. You are 26 years old. You want to retire at the age of 66. And you want to supplement whatever else you've done for retirement with a $3,000 a month check out of your savings. And you expect to live to age 86. If you think it's morbid, how do you think I feel? I don't know how much of that you figure that on the average over the next however many years, you can average a 5% return on your investment. I want to know how much money per month, how many dollars per month you need to start saving today in order to be able to retire with that $3,000 a month. What's the secret to this?
Start that way.
Work backwards.
Yeah. That's 20 years.
And it's on a monthly basis. Anybody else confirm that?
$454,575.90.
Good one. So what have we done so far? What's this first calculation?
How many years, how many years you need, sorry, I don't know how to say that. How many years you are going to be
Taking
drawing the
out.
money, drawing the money, and then how much you're going to need money for
That's
that.
the exact thing. This is how much money you gotta have in the bank when you retire at 66.
To make it to 86.
Okay, to make it to 86. Knowing that while you'll take $3,000 a month out of this, the rest of it still grows at 5%. Okay? So now that we know how much we need when we retire, we go back and plug it over here and say, well, that's the future value I need to accumulate.
That's not scary.
Does that sound like a lot of money?
Yeah.
It's almost $500,000. But what is in now? How long do you have to do that?
40 years.
You have 40 years, 480 payments. Okay? So calculate how much each payment needs to be. And make it a negative.
Why do you have 20 for M?
66 to 86, 20 years, once a month.
But,
You're going to pull out $3,000 per
oh,
month.
I'm sorry, I didn't.
It's okay.
$297.88 a month for 40 years.
That's fair.
How many?
297.28.
$297.88 a month. Well-
Doable.
I'm sorry?
I said that's doable.
Well, if you don't buy that condo we talked about, sure.
Yeah,
And if you're consistent.
yeah.
Consistency is the key. And the other key is starting early. Even if you figure, I can't make that right now. Can you make $100 a month payment?
Yeah.
Just start as much as you can, but at least start. Because the first day you put the money into that account, it's working for you and you're not lifting a finger. And then, if you really get tight about it, what happens? Every time you get a $800 tax return or a $25 birthday gift from Aunt Jezebel or whoever, you're plowing that money in here.
Wow. That's the most random.
What?
That's really random.
Yeah, well, do the best I can. I am not a professional comedian. Jeez, world's full of critics. All right, anybody got questions on how we did this? This is guaranteed to be on at least the midterm and maybe on the final two. You've got to be able to manipulate that calculator. Okay? That's everything I wanted to cover tonight. Is there anything else on your mind? Okay.
The first worksheet for the time value of money, number 7, I must have done it 10 times, never figured it out.
Okay, I don't have a copy of that with me. Could you just read it out?
Oh, read it out to you?
This is worksheet number 1,
Yes,
question number 7,
correct.
okay?
Dave wants to take a year off of work and has determined to accumulate enough savings to be able to withdraw $1,500 a month during that year.
For 1 year.
Correct. He has 4 years to accomplish this goal and can earn 4 3/4% interest.
4 3/4?
Correct. Interest on his savings.
Okay,
How much does he need to deposit each month to achieve this goal?
good. So it's the same kind of problem we just did. We have to start out front. When he gets ready to take this vacation, he's going to want a payment of $1,500 a month. I'm going to make that a negative. And he's going to do it for 1 year, 12 months. And then IY is the 4 3/4 on a monthly basis, divided by 12. Calculate the present value he needs in order to make that happen. You watch me, my luck, we get a wrong answer. So he's going to need $17,545 and some change. When we go back and we make that his future value that he wants to accumulate, make it a negative. He's got 4 years, so he's got on monthly payments, 48 payments to make with the same interest rate on a monthly basis. And calculate his payment. Anybody?
332.62.
I kept getting that number, but it was just, it didn't match up to what's on here.
That could be. I know the guy that wrote the answers here. Yeah, there's an error then on the solution sheet on problem set 1, question 7. This is the correct answer on the board.
I was like, I don't know where this is going. Okay, thank you.
No, no problem. Anything else? I'm going to stop now and I'm going to turn off the video.
For next time.
Well, I've got another class to do here after this, and I need an hour's worth of video for that too, so I only got 2 hours on the camera. So, go ahead,
For next time.
for next time.
I was able to prepare for this, have, the next set was 2.
Say again?
Last time you told us you studied all the TDM and everything,
Yeah,
because I'm having trouble understanding Canvas. If you can just tell me what I need to know, then I'll find it.
okay.
Because you said you learned all chapter 1 and do all the problems, so I did it, and I did all the TDM stuff.
Okay, you're in good
So,
shape.
I did that for this time, so next time, do you all
Th-
TDM?
This course schedule with the assignments is the same one that's on the
I know, I have
Canvas.
to go follow it after you tell me, because I'm having trouble
Okay.
with that Canvas stuff, so.
Okay. The thing we did not touch on tonight, but which is assigned, was some discussion on macroeconomics. There are some videos on here you want to watch, and I'll hit those when we meet next time. Those are the only macro videos on the exam, the midterm, so we have plenty of time to talk about that. And the other thing for our next class meeting is you've got chapters 3, 4, and 5.
Chapter 3, 4, and 5?
Yeah.
No, we're skipping chapter 2?
No, 2 was tonight.
Okay.
Yeah, I didn't get into any of the stuff. And 2 is financial markets, and I see that as less of immediate value to you than some of the stuff we've been doing.
Okay, I saw another block under TVM with videos, so that, I should have already gone through that pretty much.
Okay.
You haven't put up new stuff yet, right?
No, I'm not planning on putting up much new stuff.
Oh, good.
As far as what's up there on Canvas right now, it's pretty fixed.
Okay.
Did anyone not get this in?
Everybody sign in? Oh, there's a couple more.
Because it was weird whenever I looked on your site one day.
Yeah.
It said that your meeting time was gonna be 8 o'clock, then I went back and looked, and then it was gone.
Yeah. What I had put was, not for this class. One of the classes, I had a 6:30 meeting, which I put in military time, 1845, and the damn thing picked it up and said 8:45, and so Canvas is not my best friend either.
It's not.
The best way to get in touch with me is to send me an email and identify what class you're in. Okay?
Yeah.
I got 5 different classes, 7 sections, and if I don't know who you are and where you're from, you can make, questions 22 on this handout.
You might do it.
You're like, okay, this is how you do it, and they're like, oh.
There are some more videos on here, but for example, June 17th, that week, there's no work assigned to the textbook. We're done with TBM. It's just a couple of videos to watch. So I don't think this is going to be too bad a pace.
So far, that's pretty good.
Yeah.
Say again?
So far, I like it. It's been
Okay,
pretty
good.
It's easy to follow and stay up with it.
Okay. Anything else?
Not like 4 chapters in 1 week.